This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Good evening, everyone, and Happy New Year. I'm Sue Herrera. Tyler Matheson is off tonight. How many of you began 2018 with a resolution? Did you resolve to get fit, spend more time with loved ones? Well, we can't help you with every promise, but we can help you learn more about your money. Work to get financially fit by giving you the outlook for 2018. We begin tonight with the stock market, which is coming off a record year, and the economy, which has proved to be on solid footing. The question investors want to know is, what might happen next? Bob Pisani takes a look at the stock market, but we begin with Steve Liesman on the economy.
2018 could be a year of big change for monetary and fiscal policy. Here's what could happen. First, growth in the U.S. could average 2.5% to maybe as much as 3% as the U.S. gets a lift from overseas growth, better domestic demand, and stimulus from the tax bill. That'll be an improvement from the past several years when GDP averaged just around 2%. The question is whether those gains can last or if they're just one-time events. Second, the U.S. budget deficit is likely to rise next year, and we'll need better growth to bring in more revenue to pay the tax cut bill. Bigger deficits could raise interest rates as the 10-year yield nears 3%. And finally, the Fed is likely to hike interest rates 3 times as new Chairman Jerome Powell takes the helm and steers a course for the Fed along the lines of his predecessor, Janet Yellen. But if growth really takes off, the Fed could consider a 4th hike. For Nightly Business Report, I'm Steve Liesman.
IPOs, Bitcoin invade Wall Street, and women in leadership. Here's 3 predictions for 2018. First, get ready for a much stronger IPO market. 2016 was a terrible year. 2017 was better. 2018 will be much better. Some big names will likely go public, including sandwich shop Pret a Manger and fruit giant Dole Food. Then there's the tech unicorns. Everything from Lyft to Dropbox to shared workspace firm WeWork to Airbnb may make it public. Finally, there's a shot that Saudi oil giant Aramco may list in the U.S. as well. Second, the intersection of Bitcoin and Wall Street. 2018 will see one or more major banks create a platform to use digital currencies to bring small companies to market. The bank would own the platform and provide advisory services. Yes, there's oversight issues, but regulators are looking to work with the industry to put more oversight into this market. Finally, expect investors to wake up to the fact that there's not enough women in leadership positions in corporate America. There's only 26 women CEOs in the S&P 500, about 5% of the total. That number will double to over 50 by the end of 2018. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So, what can investors expect in the year ahead? Here to talk about that is Sarah Hunt, portfolio manager at Alpine Funds. Good to see you, Sarah. Welcome back.
Thank you.
First on your list is the trajectory of interest rates. Bob mentioned the fact, and Steve mentioned the fact, that the Fed is expected to raise rates. What effect do you think that will have on the markets?
I think it depends very much on what's going on with the economy, and I think that the Fed will still be somewhat data dependent. If the Fed thinks that the economy is doing well enough to raise rates, I think that you will have seen some growth and expect to have more growth. So I think that that will actually be an okay thing for the stock market. I think the problem would be if they decide to raise rates, but you don't see a good amount of data on the growth. And I think that that's one of the reasons that having a new Fed chairman means that if it looks like we don't get the growth, maybe we won't raise them so much. If we do see that growth, then I think that raising them will be okay. But I think that's going to be the big question for equities across the globe, which is what are central banks doing and what's going on in Europe and Japan, and are you getting enough growth to offset any taking away of monetary policy?
What about the global stock markets? This has been the first couple of years in a long time that we've seen growth in terms of equity performance anyway, not just in the U.S., but also in Europe.
Well, you've seen a better global economy. So the U.S. was the first out of the Great Recession, and then you had the European economies lagging behind. Their monetary policy caught up, and you're now seeing global growth, which is something that we haven't seen in the last several years. You've seen pockets of it where the U.S. was growing, albeit somewhat slowly. The U.S. growth is a little bit better. Europe has gone from being negative to flat to actually positive, and I think the Asian economies have been doing pretty well. So that, with that backdrop and with very low global interest rates and negative interest rates across a number of countries outside of the U.S., I think that that's why you're seeing such good response from global equities.
What about the tax reform proposals that are going through, and we've already seen a number of companies responding to it?
Well, I think that's one of those questions where we have to see now how it takes effect, because I think that those announcements actually were quite positive today. And I think that that's one of those places where you see that if companies are actually going to act on that, it's going to be positive for the economics going forward. If they don't, then it may be that we've had a great build-up to the tax reform, but in effect, it's not as helpful as people were expecting it to be. So I think if you continue to see companies make announcements that are positive, that's going to continue to push equities and to push people's general economic feelings, which sometimes the psychology of it is as important as anything else. So you see high consumer confidence. You want to see that continue.
What worries you, or what pitfalls might be out there? I mean, obviously we don't know until they're upon us, but is there anything that you are watching for?
Well, I think the big question is, as global central banks ease off on monetary accommodation, can fiscal changes like the tax reform in the U.S. and can global growth make up for the fact that monetary policy is not going to be as accommodative? And for a long time, we've had very low interest rates, so people have been pushed out of fixed income and into equities. As interest rates start to rise, do people make that trade-off? I think the concern is what happens as we reverse some very unusual monetary policy over the last several years, and can we do that without triggering either corrections and or just lack of growth in equities? And I think that's the biggest question for the markets going forward over the next year or two.
Well, here's to a good 2018. Sarah, thank you so much for joining us. Sarah Hunt with Alpine Funds. And as we saw this past year, what happens in Washington affects Wall Street. So what's next on the D.C. agenda? Eamon Javers is in our nation's capital.
First, we could see a much different group of White House aides advising the president in 2018. Insiders are watching for any signs of departure from National Economic Council Director Gary Cohn, who publicly split with the president earlier this year. Also closely watched will be the president's top liaison to Capitol Hill, Mark Short, and keep an eye on the president's son-in-law, Jared Kushner, and daughter, Ivanka Trump. With investigations swirling and legislative progress slow, some believe the power couple may want to return to New York. Second, the special counsel's investigation will continue to haunt the Trump administration in 2018. Already, Robert Mueller has obtained guilty pleas and cooperation from former National Security Advisor Mike Flynn and Foreign Policy Advisor George Papadopoulos. No one outside the special counsel's office knows exactly where he is going next. How will it all end? Three possibilities: more indictments, an impeachment referral to the House of Representatives, or a full exoneration of the president and his team. And third, the White House will try to capture legislative momentum after the tax debate. President Trump says one focus will be on welfare reform. He argues some unemployed people make more in welfare benefits than workers struggling with two jobs. That suggests he'd like to reduce benefits. But a senior administration official told me the plan will involve getting people back in the workforce and increased job training, suggesting an increase in certain benefits. Either way, the White House will try to get legislation through Congress early before midterm election year politics makes progress impossible. For Nightly Business Report, I'm Eamon Javers at the White House.
Technology stocks were hot last year. Bank stocks also rallied in bits and spurts. And given that these two groups make up the biggest sectors of the market, what happens in those industries matters to your money. Josh Lipton examines the tech sector, but we begin with Wilfred Frost on financials.
Some big tailwinds for banks in 2018 and a few risks to watch out for too. First, deregulation. Investors are excited about deregulation actually arriving now that key positions are filled, including Jerome Powell as Fed Chair, Randy Quarles as Fed Vice Chair of Supervision, and Joseph Otting as OCC Controller. The key things to watch for are changes to CCAR, allowing bigger capital returns, changes to Volcker, helping trading revenues, and overall reductions in regulatory expenses. Second, rates. Expect interest rate hikes to continue to help. Much of the recent focus has been on the flattening of the shape of the yield curve, which isn't ideal for banks long term, but there remains an immediate positive earnings impact for every Fed funds rate hike that we see. In terms of risks, keep an eye on deposit betas, i.e. the rate at which banks compete and pay depositors more as rates go up. And also credit quality. While still low by historical standards, it has shown signs of rising recently, especially in the subprime consumer space. Final thought, tax reform. Bank share prices may have already risen sharply in late 2017 on hopes for tax reform, given that they pay a high disproportionate rate of tax, but expect the benefits to flow through to EPS in 2018. For Nightly Business Report, I'm Wilfred Frost in New York.
Tech is the best performing sector in the S&P 500 this year, and with new products and increased competition expected in 2018, here are 3 things to watch. First, retailers rush to Microsoft and Google Cloud. As retailers decide to move to cloud computing, some are writing big checks to Microsoft and Google and avoiding Amazon, which makes sense. Why send millions of dollars to your most serious rival? So Kroger, Walmart, and Target have all decided that AWS won't be the vendor handling their massive workloads. That trend is going to accelerate in 2018, with Microsoft and Google sweetening the deals they offer retailers. Second, Apple reaches a $1 trillion market cap. Since Apple's initial public offering in December 1980, its market value has surged more than 63,000%. This year alone, it skyrocketed up more than 45% to around $900 billion. The stock needs to touch $194.77 for Apple's market cap to hit that $1 trillion mark. It will get there in 2018 as Tim Cook's company benefits from a wave of global upgrades to the iPhone 8 line and iPhone 10. Third, fewer private tech companies take that public market plunge. So far this year, there have been 25 tech IPOs, 5 more than in 2016. But get ready for a drop next year. A few unicorns are rumored to be considering a public debut, such as Spotify and Dropbox, but they appear to be the exceptions. Startups are still right-sizing after years of raising money at what many now consider unjustifiably high valuations. And some very well-known companies that did go public this year, like Blue Apron, are trading well below their IPO prices. For Nightly Business Report, I'm Josh Lipton, San Francisco.
So what other trends can we expect to see play out in the tech sector next year? Joining us to discuss that and more is A.B. Mendez, Senior Research Analyst at Frost Investment Advisors. Welcome back. Nice to see you. Happy New Year.
Good to be here. Thank you for having me, and Happy New Year to you, Sue.
Just a broader question. You know, tech was so hot last year. Do you think it will continue that performance in 2018, or is it time for a little bit of a cooling off?
Well, it's very interesting. Tech had a great run in 2017. 2016 was good as well. But as strong as tech was in 2017, as we look at our favorite valuation metrics, price to earnings, price to cash flow, tech really has the cash flows have grown so rapidly. The companies have delivered so much value that a lot of that run has been justified, and on a valuation basis, they haven't really become meaningfully more expensive. If anything, some of them have become less expensive relative to the broader market.
One of the, as we go through kind of the themes for 2018, one of the things that I've been following, and apparently you agree, is the rise of the personal assistants, consumer technology versus business technology.
Absolutely. I think 3 of the key themes that we're focused on are, Internet of Things, and there's a lot in there, artificial intelligence and machine learning becoming more of a real investable theme, and consumer devices. It's fascinating, just the rate of change that we're witnessing, in the last decade. And the home assistants, it's interesting on the one hand that, Apple is kind of missing out. Their HomePod was not ready for this holiday season, so Amazon is doing a tremendous job with the Echo, and Google Home is doing very well. These are, kind of in our daily life examples of how artificial intelligence and machine learning can just make things easier, more efficient, perform simple tasks for us. But at the same time, for Apple, I would also say that while they're missing the home assistant the holiday season, the iPhone supercycle is upon us, and numerous large companies with this tax cut are saying we're going to give every employee an extra $1,000 bonus. So that certainly doesn't hurt as you're waiting for the tens to start making delivery.
What about e-commerce? I mean, we talk about the Amazons of the world, certainly with e-commerce and the like, but where do you see pockets of opportunity or growth in that particular sector?
Well, it's interesting, the sort of combination of Amazon and Whole Foods. I think this has been viewed negatively for a lot of consumer packaged goods companies, to the extent that there's more price deflation, the competition between Walmart and Amazon. To answer your question, I'd say subscribe and save feature from Amazon. Walmart has an analogous feature, but subscribing to things that we tend to restock on a regular basis and just taking those out of our shopping basket when we actually have to make a physical trip, it saves time, it engenders more consumer loyalty from those e-commerce platforms. And then for leading indicators on e-commerce, I always look to China. China, because consumers in China tend to purchase goods across every category online at a higher rate than consumers in the U.S. They kind of skipped desktop and just went straight to mobile. So mobile commerce companies like Alibaba and JD continue to innovate very rapidly there, and in some cases are adding new features that you'll see Amazon or eBay or other U.S. companies follow, whereas in the past they were always copying the U.S. companies. Now there's more of an interplay there. Very interesting. Thanks so much, AB.
Thank you. Appreciate it. AB Mendez with Frost Investment Advisors. And still ahead, from real estate to retail, what 2018 may have in store for these critical sectors of the economy.
(2017) was a rough year for retail, with the number of retail bankruptcies topping 2008 highs, thousands of store closures, and falling sales the norm for many. But with the holiday season showing signs of life, 2018 may not be worse, but it will be different. Mall M&A. More stores will close and the weakest malls will shutter. No one thinks that physical retail will entirely disappear, but in the age of Amazon, only the strongest will survive, which means malls may find strength through consolidation. Amazon buys another retailer. When Amazon bought Whole Foods, the price of its stock went up enough in the first day to cover the cost of the deal. And while the full extent of the takeover hasn't been seen yet, now that the online behemoth sees the value in physical retail, it could buy another well-known name, possibly one that targets lower-income consumers. Kylie Cosmetics gets bought. The youngest member of the Kardashian-Jenner family has a makeup brand with sales and a dedicated following that established cosmetic companies could only dream of. As the selfie culture reigns and cosmetics are the rage, watch for Estee Lauder or L'Oreal to clamor for Kylie before the valuation gets too high. For Nightly Business Report, I'm Courtney Reagan.
And from retail to healthcare, this is a sector that touches all of our lives, from the doctors we see to the medicines we take. And the tremendous change in that industry shows no sign of letting up. Meg Terrell on the new innovations being made by pharma and biotech companies. But first, Bertha Coombs.
I'm Bertha Coombs. 2018 will be another year of change and uncertainty in healthcare. Here's what to watch. 1. M&A, as in mergers and antitrust scrutiny, will be front and center. Regulators blocked the big insurance mergers, saying they'd hurt consumers. Will they block CVS's $69 billion deal to buy Aetna, which aims to create a new kind of healthcare model centered around consumer clinics, not doctors? Nonprofit hospitals are gearing up for big deals, too. If approved, watch for more mega mergers as others play defense. 2. Amazon will impact the healthcare supply chain, whether or not the online giant gets into the pharmacy business. The Amazon threat and mounting regulatory scrutiny over pricing will keep pressure on pharmacy benefit firms and drug wholesalers to hold down costs and prove their value. 3. Obamacare won't go away. Doug Jones's win in Alabama makes the math even tougher for Republicans to get enough votes in the Senate for full repeal. But the Trump administration can still make big changes at the edges, especially through state waivers on plan benefits. The lead up to 2019 exchange enrollment will likely be rocky again, with another year of uncertainty about insurer participation. For Nightly Business Report, I'm Bertha Coombs, New York.
Medicine is changing, from the way we think about treating disease to how we may pay for it. Here are 3 predictions for pharma and biotech in 2018. Drug pricing in focus. There's been no major government moves on drug prices since Trump took office, but 2018 brings new challenges. The rise of one-time treatments for cancer and genetic diseases that offer new hope to patients, but will carry price tags of hundreds of thousands or even $1 million. The focus will turn to how we pay for those medicines. Second, immuno-oncology dominance. Already, drugs that use the power of our own immune systems are improving the way we treat cancer. It's a battle on Wall Street as well, and 2018 brings key data that could move stocks of Bristol Myers, Merck, AstraZeneca, and Roche. Finally, a return to M&A. Investors hope 2018 sees corporate tax reform spurring acquisitions of mid-sized biotech companies, marking a turnaround from a relatively slow 2017. For Nightly Business Report, I'm Meg Terrell.
Your house is likely your biggest asset, so we asked Diana Olick to tell us what's ahead for real estate.
2017 saw a big slowdown in the housing market, not in prices, but in home sales, because there was just nothing to buy. 2018 will not be much better. Sales slow more. Sales could become even more sluggish as the supply situation worsens. Yes, home builders will continue to increase production, but slowly and mostly in the move-up market, not the entry level where millennial demand is highest. That could squeeze would-be buyers back onto the sidelines. Prices push higher. All that demand without much supply will keep the heat on home prices, and affordability will become a much bigger issue, especially now that the Republican tax plan wipes out valuable deductions for property taxes and mortgage interest in high-cost areas. Mortgage reform. The biggest move in 2018 could be in the mortgage market and the elephants in it, namely Fannie Mae and Freddie Mac. Talk is finally heating up in Congress to reform the system, and private investors seem not only ready but eager to get back in the mortgage game. As for mortgage rates, most predict they will move higher, but most predicted that for the past 2 years and were wrong. For Nightly Business Report, I'm Diana Olick in Washington.
Coming up, we're going to take you on the road and into the air in the new year. The auto and airline industries are preparing to fly high in 2018 thanks to strong demand and consumer confidence that remains robust. What can we expect in the new year on the roads and up in the air? Phil LeBeau takes a look.
After 3 straight years with sales topping 17 million vehicles annually, the auto business will slow down in 2018. Sales are expected to fall 3 to 5% next year, due mainly to a slight pullback in demand. Still, trucks and SUVs will remain popular picks in showrooms thanks to gas prices that remain relatively low. Meanwhile, you can expect sales of electric cars to charge up in 2018 thanks to 2 high-profile vehicles. First, there's Tesla's Model 3, which will be seen around America more often as the automaker ramps up production. Meanwhile, GM expects sales of the Chevy Bolt to increase due to a full year of nationwide sales. Finally, expect to see plans for self-driving cars to expand in the next year. Waymo will start its self-driving rideshare service in Arizona and grow it from there, while GM's self-driving Chevy Bolt will go from the streets of San Francisco to new test drives in New York. And other automakers expect their autonomous drive programs to kick into a higher gear next year, setting up 2018 to become a crucial year for an auto industry going through a technological transformation. The airline industry is soaring as it flies into 2018, thanks to strong demand in the world's key markets. From the U.S. to China to Europe, airlines are expecting near-record passenger levels in 2018. That's one reason why global profits for carriers are forecast to top $38 billion, which would be an all-time high. One reason profits will increase is because airline fees and revenues will keep climbing higher in 2018. From checked bags to changed reservations, airlines are projected to rake in more than $57 billion in revenue from those fees. As much as passengers may complain about the fees, they are not going away. Finally, expect to see low-cost carriers continue to expand in 2018. Spirit and Frontier see more routes they can add here in the U.S. as they expand domestically. Low-cost international carriers like Norwegian Air will continue adding routes from Europe to the U.S., setting up 2018 to become a very busy and very profitable year for an airline industry poised to climb higher. Phil LeBeau, Nightly Business Report, Chicago.
A big surprise in 2017 was the growing interest in Bitcoin. The controversial cryptocurrency went from obscurity to a hot topic. Its price hit a number of new highs, and Bitcoin contracts even began trading on the futures market. Though much skepticism still surrounds it, Seema Modi reports that the currency could gain even more buzz this year.
With cryptocurrencies capturing the attention of investors from Wall Street to Main Street this year, here's what to watch for as they go more mainstream in 2018. First, for investors, that means more options to invest in the cryptocurrency ecosystem. Expect a boom in everything from exchanges to new trading platforms that will make it easier for the everyday investor to get exposure to cryptocurrencies without actually owning the underlying coin. Second, expect Bitcoin's rise to be challenged by alternative coins. Bitcoin's rapid rise has given birth to over 1,300 digital currencies. As Bitcoin gets more expensive, traders look to its competitors for opportunity. Watch Ethereum, Ripple, and Litecoin, which live on blockchain but offer different functionality than Bitcoin. And third, get ready for more regulation. The SEC has a newly minted cyber unit that has been tasked with finding bad actors that are using digital currencies for money laundering and funding terrorist activities. That means more enforcement actions in the coming year. Regulation could ultimately add more credibility to the space and perhaps even pave the way for Bitcoin exchange-traded funds to be approved. For Nightly Business Report, I'm Seema Modi in New York.
Thank you for watching this special edition of Nightly Business Report. I'm Sue Herrera. Happy New Year. Have a great evening, everybody. We will see you here tomorrow.